Hi there, I'm Jeff Whedon, CEO here at Forager Funds Management. I'm speaking with Steve Johnson, our Chief Investment Officer, about our latest 2017 annual report. Steve, you always take a long-term view on investing. Why produce a report like this?
We're trying to strike the right balance here between transparency with our clients and not reporting about performance too frequently. So we made the decision a couple of years ago that we were going to stop talking about stock price movements and short-term performance in the monthly and quarterly reports, but that we would produce something on an annual basis that was more transparent and more detailed than what most people in the industry do. So this is our attempt to strike that balance between we want you to see how we're performing, we want you to see exactly what we've been doing, we don't want you focused on short-term price movements.
And looking at each of the funds, perhaps starting with the Australian Shares Fund, what are the observations you'd make about that?
I said in last year's performance report that the performance was good, but that we had a huge tailwind in the fact that small and mid-cap stocks dramatically outperformed the larger end of the market. So our performance was better than the index, but most people's performance was better than the index last year. This past 12 months, it's been exactly the opposite. The banks and the resources companies have driven the All Ordinaries Index to higher returns, while a lot of small and mid-cap stocks have underperformed. So our outperformance in this last year, we outperformed the index by about 10%. The total return net of fees was 25%. We achieved that in a much more difficult environment than we did before. We still had a couple of disasters in the portfolio. You can read about those in the performance report, but when you look at the spread, we had a very large number of winners relative to the few losers across the portfolio. So it was a very pleasing result.
Terrific, Steve. And the International Fund, how did investment performance in the stocks themselves compare against currency? And were there any free kicks this year with currency?
Currency was actually a headwind, which confounded most market prognosticators. As of last year, everyone thought the Aussie dollar was going to go down, and it appreciated not just against the US dollar, but against all major currencies over the past year. It subtracted about 3% from our return. We still ended up with 27% as a return net of all fees in that international portfolio. I'm hopeful we're going to look back on this as a transformational year for that portfolio. We've been getting more confident, we've been getting more concentrated in that portfolio, and we had a year where we almost didn't have a loser across a portfolio of 25 or 30 stocks. We had some very big winners in Europe, but it was a really good spread of excellent performance in that portfolio. So it was an outstanding year, and one that people shouldn't expect to be replicated all the time, but one that I think shows that approach has been working.
Fantastic. And looking ahead this year, are there any other changes or things you'd like to flag about how you'd like to report performance? And indeed, how should investors assess Forager's performance when they're thinking about us?
It's a really funny thing, isn't it? Because ultimately that's what you pay us for. You want us to perform, but I think too much focus on short-term performance is not healthy for the people who invest with us or for us as the investors. One of our big advantages as a funds management company is our clients give us the flexibility to invest for the genuinely long term. So you should look at our performance over an appropriate period of time, and we say that's 3 to 5 years, and say, are you guys making me more money than I would get from buying a low cost index fund or not? So that's the long-term picture. I think in the short term, the key is really to focus on the philosophy. Do you agree with our style and the way we are investing? Are you built to handle the inevitable downturns that come from our style of investing? And then really importantly, understand the stocks that we own. We put a lot of time into explaining what we've bought and why. And if we're right about those investment theses over the long term, it's going to show up in the share prices. So you can read what we've written about the stocks, follow the stocks, see whether it's unfolding the way we wanted it to or not, and that is far more important than short-term price movements.
Thanks, Steve. You can find the latest performance report on the web, or it's with your printed copy of the June quarterly report.